70 cents a share. That's where GameStop bottomed in March 2020, 91% below its 2016 high. Today, the stock trades at 21.52, up 178% since this window opened. A mall retailer nearly died, then didn't. So, where's the high water mark? Rewind to the early 1990s. A game cartridge could cost $50, real money for a teenager. Babbage's, the chain that became GameStop, let kids trade in finished games for store credit, then resold them at a discount. That trade in loop ran on margins north of 40%. By the time this chart begins in July 2016, GameStop's small heyday was already fading. Shares closed that week at $7.74. Just 5 years earlier, fiscal 2011, revenue had peaked at $9.55 billion, riding console launches like the Wii and Xbox 360. A downloaded game can never be traded in. That was the cracked digital distribution opened under GameStop's whole business. With some publishers seeing over 80% of sales go digital, GameStop stock had drifted below $4 a share by the end of 2019. The Mall King was quietly becoming a ghost. In fiscal 2019, the year digital finally caught up, GameStop's revenue fell to $6.47 billion. The company posted a $470 million net loss, and its store count shrank to roughly 5,500, down from over 6,000. 2 weeks after GameStop closed its stores to walk in customers, the bill came due. A March 26th filing showed a fourth quarter loss of $21 million. CEO George Sherman told investors, and I'm quoting, "The COVID-19 pandemic has created a fluid and challenging environment, but we are taking aggressive steps to manage through it." 3 days later, the stock hit bottom, 70 cents a share, 91.2% below the 2016 high. Store lobbies sat empty behind curbside pickup signs. Wall Street was pricing in bankruptcy, plain and simple. 1 week after the bottom, the stock jumped 38.9% to 97 cents. The trigger wasn't company news. It was a filing showing Michael Burry, the investor who called the 2008 housing crash, had bought a stake. Burry discloses a 3.4 million share stake, betting the next console launches would keep GameStop alive long enough to matter. By September, a different kind of buyer had shown up. Ryan Cohen, who had built Chewy into an e-commerce giant, had quietly amassed 9.6% of GameStop. The week his stake surfaced alongside a quarterly report showing revenue down 26.7%, shares still surged 55.5% to $2.37. 2 months later, Cohen put his case in writing. In a letter made public on November 16th, he told the board, and I'm quoting, "GameStop needs to evolve into a technology company that delights gamers and delivers exceptional digital experiences, not just survive as a brick and mortar retailer." It was the blueprint for everything that followed. On January 11th, 2021, GameStop confirmed Cohen and two former Chewy executives, Alan Attal and Jim Grew, would join its board. The stock had already clawed back to its old 2016 high of 793 the day before. Wall Street's most shorted stock now had a credible turnaround story attached to it. Short interest on GameStop had topped 100% of its tradable shares. Hedge funds had bet against more stock than technically existed. Reddit's "Our Wall Street Bets" piled in to force those shorts to buy back at any price. In the week ending January 24th, shares rocketed 399.9% to 81.25. The frenzy peaked on January 28th, when GameStop touched an intraday high of $483. Trading was halted again and again for volatility. Then brokerages including Robinhood restricted buying, and the rocket that Reddit built came back down to earth in a single afternoon. Days later, Congress wanted to know who was behind it all. Keith Gill, the Reddit user known as Roaring Kitty, whose posts had helped spark the buying, testified on February 18th. Asked to explain himself, he offered four words, and I'm quoting, "I like the stock." The squeeze didn't just save GameStop, it funded its next act. In the months after, the company sold new shares into the mania, raising over $1.6 billion in cash, and used it to pay off every dollar of long-term debt it carried. The mania didn't end in 2021, it kept echoing. In March 2022, shares jumped 67% after Cohen raised his stake to 11.9%. In May, a 4-for-1 stock split added 43%. In March 2023, A surprise profit added 44.5%. In April 2024, Roaring Kitty's return alone added 38.4%, with no new business news at all. GameStop today sits on roughly $1 billion in cash and carries no debt, a fortress built by meme stock buyers. But the store business behind that fortress hasn't turned an annual profit since 2018, and the NFT marketplace coin launched with fanfare has been quietly scaled back. The top line tells the same story. Fiscal 2023 revenue came in at $5.93 billion, down from $6.47 billion 3 years earlier. The stock at 2152 is up 178% since 2016, sustained less by earnings than by a fan base still riding the story. And that's where the line stands.